What is up, guys? Today I'm going to be showing you how to master supply and demand trading. Today I'm going to be showing you an easy strategy that anybody of any level can use. This does work, and make sure to stay tuned and watch this all the way through because you do not want to miss this amazing strategy. So let's get into it. So first off, we just have a quick trading checklist. So you start off with the daily time frame. You're looking for a market structure shift on the daily time frame. Then you have a daily time frame fair value gap. So as you see here, we have a market structure shift on the daily time frame. In this case, it's a bearish scenario. Then we have a fair value gap that forms after the breaker structure on the daily time frame. The third step that we're looking for is we're looking for a retracement into the daily fair value gap. So we look for price to come into that fair value gap that it formed on the daily time frame. In this case, the daily time frame is acting as our higher time frame. Now, on the fourth step, once price comes into our daily fair value gap, we're using the 1 hour time frame as our lower time frame to confirm an entry. So on the 1 hour time frame, we're looking for a market structure shift within the fair value gap. So when price taps into this daily fair value gap, we're going down on the 1 hour time frame, and we're looking for a market structure shift on the 1 hour time frame. So essentially, we're looking for price to be fractal and do the same move that it committed on the higher time frame on the daily time frame. The fifth step is we're looking for a 1 hour retracement into the order block. So the only thing that's different from the daily time frame is on the 1 hour time frame, we're entering on the order block. This is just so you get a better risk to reward ratio and you also get a confirmed entry. Once price retraces into the order block, that's when you look to take your entry. You set your stop loss above the order block or below if you're in a bullish scenario, and then you can take your take profit at a 1 to 2 risk to reward if you want to be safe, or you can aim for the daily liquidity pool. So now I'm going to show you a real live example of this setup on the daily time frame. Now this is oil, and this was recently. So this was actually a trade I took as well. So I did take shorts here, but I just entered off just the daily time frame. I didn't use the 1 hour entry model. So if we look here at this low, we break this low. So once we break this low, we now have a daily market structure shift. So we have our market structure shift below this low because this daily candle breaks below this low. So that's step one, the daily market structure shift. Now the second step is we're looking for price to create a fair value gap on the daily time frame. Do we see a fair value gap? Yes, we do. We actually see a volume imbalance with a fair value gap. So we'll just mark out the whole thing. So the third step is we wait for price to retrace into our daily fair value gap. So we see price creates the fair value gap with this green candle. Then we wait for these two candles to retrace into this daily fair value gap. So as you see with this black candle, we retrace into this daily fair value gap. So at this point, once we tap that gap, we would go down to the 1 hour time frame. And since price is fractal, we're looking for the exact same thing on the 1 hour time frame. We're looking for price to break structure. So we're looking for price to break a low and then form the exact same setup. So if we actually zoom in here, what do we see? Well, we see this low right here. Price comes up, makes a high, fails to break this high, and then on these candles we break below this low. So this is our 1 hour market structure shift. So now we have a 1 hour market structure shift. The next step is we're waiting for price to retrace into an order block that was created. Now you could also take price on a fair value gap, but this strategy is using supply and demand or order blocks. So we would enter on the order block. So this order block here is these last two up candles. So we would mark this out, and I'll make this a different color. So we would mark the order block out. Now when price comes into this order block, that's when we would look to get our entry. So we would take our entry, and remember we set our stop loss above the order block, and you can either take your take profit at a 1 to 2, or you can target the daily liquidity pool. If price does want to head all the way down to sell side liquidity on the daily, you could target this sell side liquidity pool down here. And obviously, looking in hindsight, price did come all the way down to this liquidity pool, sell side liquidity down here, and that would have been a 1 to 12 risk to reward. Now I will say that don't expect to get a 1 to 12 risk reward all the time. This is not viable, having this much of a risk to reward all the time. That's why I said 1 to 2. If you have a 1 to 2 risk to reward, you can have a 40% win rate, meaning you lose 6 out of 10 of your trades, and you will still be profitable in the end. So that is really all you need to be profitable. I would not be aiming for a risk to reward like this all the time, because it is just not viable, especially for beginners. But as you guys see, I use the supply and demand trading strategy to catch this trade, and it's actually very simple. You're just using the daily time frame, a daily breakage structure, daily fair value gap, a retracement into the gap. Then you go down on your 1 hour time frame. You're using your 1 hour for your entry to confirm an entry and to confirm if price actually wants to head down from that daily gap. And you're looking for the exact same thing on the 1 hour time frame. You're looking for a breakage structure, a retracement. You enter off the order block, and then you target lower. Or in a bullish scenario, you would target higher. I hope you guys enjoyed this video. Make sure to like, comment, and subscribe, and I'll see you guys in the next one.